on gold here, interested in longs, but really specifically, I'm interested in the daily chart level that I've been talking about here, this 2950 area of support. So if I draw a fib retracement from swing low to swing high, that puts me at about a 50% retracement of this recent move. I'm a little cautious on gold at these levels. I'll tell you why. Again, you ready? Here's why it's all connected. The VIX dropping and volatility kind of cooling off right now tells me that not certainly, but there's a higher probability that we may not make a kind of runaway move on gold at this moment. Now, if something changes, obviously something changes. Like if something freaks the market out again, oh, gold might just go higher as people rush to safety. But I think what might be an appropriate patient play for me is I took profits on my gold move here. Not the best timing to exit the trade, but I went long here. I closed out here for a profit. And now what I'm looking for is an opportunity to get back into the trade. But I think that this thing is I want to be careful how I say this because newbies might hear it wrong. I am not saying that I think gold is going down. I'm saying I think that it's due to pull back. And there is a difference. So let me break that out for you. So I like gold longs quite a bit. We have Edge Finder confirmation. If we take a look at the top setups page on the Edge Finder, I believe that, yep, gold is our #1 pick on the Edge Finder right now. By the way, is everybody trying out the Edge Finder this week? It's free access to everybody. Our software tool is completely free to use right now. If you are not using the Edge Finder, quick public service announcement. Step 1, join the Telegram channel. That's where we're dropping the information. And step 2, in the Telegram channel, you ready? Boom, got dropped this morning. Get access to the Edge Finder completely free if you're in our Telegram channel. Step 1, join the Telegram. The link has just been dropped in the chat, the live stream chat. It can also be found in the description down below if you're watching this recording at a later point. Step 2, go to your Telegram, click right here, this message. That will be where you can apply for free access to the Edge Finder until the end of this week. That is available, like I said, ending soon. Okay, let me keep going. So I like this concept, right? Gold longs, but I've got to be patient because volatility is drying up a little bit. I think we're cooling off. I think that the tariff stuff, in my opinion, has reached an apex. We'll see, if I'm correct about that. But if I am correct about that and tariff worries are kind of slowly dropping down, then gold probably has room to have a healthy pullback. Now, again, let me be very, very clear how I say this. I am not saying, oh, I think it's going to pull back and I'm going to short right here and I'm going to bet that this market is going to go down. I'm not doing any of that. None of that. We're in a strong upward trend. The fundamentals still within my system here favor gold longs. So if something in the Edge Finder has a straight up bullish or bearish reading, that means I'm not taking a contrarian trade to that. For me personally, you do what you want. But for me, the Edge Finder says very bullish. That means sentiment, technical, and economic data is generally leaning bullish on this particular chart, gold. So I am absolutely not going to try and get cute and try and get fancy and trade the pullback. I know a lot of traders will do that. If you have success doing it, by all means. But to me, that was never a trade that made me good money, right? You might get lucky. You might be able to catch a little bit of a sell pullback. Oh, I got away with it. But most of the time, if fundamentals are really killing it, like if there's a really bullish fundamental story, you tell me how easy it is to try and catch the pullback on a move like this, right? That's a fundamental move, right? With the dollar weakness, with expectations that the global central banks are going to continue to cut interest rates, flooding liquidity into the world, that makes prices of gold mostly float up. That's why we pay attention to fundamentals. To me, to try and trade the pullback, try and get cute about that, again, I've never had a lot of success trying that approach in the markets. I prefer take me to a daily chart, tell me about the fundamentals, and then I'll wait patiently for pullbacks. But I'm trading in the direction of the dominant move. I'm not going to try and catch the offset move because it's incredibly hard to time. And look, you ready for this? This is something you just have to, someone did this in their video one time, and it resonated with me massively. If you're a buyer in this market versus a seller, let's talk about how hard or easy it is to make money. If you're a seller, you had this move, that was great. Maybe this move, maybe this move, maybe this move. If you're a buyer, if you are a buyer of this chart, you made huge money here. You made huge money here, huge money here. And what fascinates me, guys, is that retail, again, this is not me guessing. This is something we've observed time and time again by market sentiment. We can see this data so frequently. During these moves, retail is short, and during these moves, retail's buying in, or they're finally closing out for even hoping to try and get break even, but oftentimes they're blowing their accounts trying to short these kinds of moves. So you tell me, you think about this before you get super contrarian and trying to bet against gold. I've got people on Twitter who have been tagging me, off and on for months, even maybe a year plus, telling me about how gold is going to crash and all this and that. And like, maybe it does eventually, maybe it does, but I don't try and make those kind of huge career calls very often, right? So trying to tell me, oh, gold is going to crash massively, maybe it does, but I've heard it 7,000 times in the last few years, and I've just been staying long because the fundamentals make sense. So think about it. Where's the easy money in this chart? Is it getting short? No, that's the hard money. You got to fight every nickel and dime to make any money trying to short gold in the last few years, because the fundamentals have been so strong. The fundamentals have been so strong. Central banks are trying to cut rates. Inflation's been cooling off. Central banks are buying gold to get away from the dollar, global reserve stuff. There's a strong story for this, right? So we stay with the dominant trends in markets. That's where the quote unquote, there's no such thing as easy money. But if there is, the closest thing to quote unquote easy money to me is riding fundamental trends and not trying to fight them, not trying to be a hero, not trying to call tops, not trying to call bottoms. Okay? I hope that makes sense, but really, really important stuff. Gold is still saying bullish, so I'm not looking to short gold, but I'm looking to wait for a pullback. If I can get that, I think my risk to reward for long setups looks really worth it. Hopefully that makes sense. I know there's a lot of gold traders in the room, so that was a pretty comprehensive breakdown on gold today.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
NASDAQ's also a bullish reading. Like I said, I've been looking for that pullback on NASDAQ. I am also already long silver. Silver, that trade is doing okay. Also, check this out. This is our new trade tracker that we're working on too. We've been building some pretty cool tools here. This will make it so that interactively, members in our Discord can pull up this page, and you can see it's actually updating automatically every 15 minutes. So I have a silver long position. I have several stock positions open right now that I opened up recently. I mean, I bought a whole bunch of stocks the last few weeks. I've been talking about that in my videos. Silver longs, euro dollar longs, bunch of stocks that I have open, and looking to add, like I said, a NASDAQ position. So I'm quite busy on the trading side. But you can see the P&L, or not the P&L, but the change of the position. So I have like Tesla. Oh my gosh, Tesla is absolutely ripping. Elon Musk, please don't say anything crazy on TV and just sell cars and build cool technology. Go back to rockets and cars and make the stock go up 1,000,000%. Anyways, here's the silver trade. So I went long a couple days back. Very little drawdown on this one. Pretty much immediately started going into profit. However, recently I also tried a Bitcoin long, which did not work at all. Stopped out on that. I'm looking for another chance to try Bitcoin longs. We're getting bullish readings on the edge finder. So I would like to see this one break with a little bit more decision here. If you start to see some technical, kind of breaks, retests, breaks, I may be interested in getting some Bitcoin longs.
Portfolio is maxed out at the moment, so we have got quite a few positions. So we've got dollar yen short, which isn't playing out very nicely at the moment, which is unfortunate, but it is what it is. We've got a 1-to-1 trade with the S&P 500.
Nice.
So what I mean by that is if the S&P goes up 1%, we're up 1%. We are short euro dollar. We actually caught the very, very tippy top, which was really nice. Silver long, I think you're silver long as well.
Mm-hmm.
Australian dollar, New Zealand short, which is currently around entry. We've got a Google long. Euro Swiss, we took long as well yesterday. And we've got a NASDAQ long, which looks like it's about to get stopped out, actually. But yeah, that's it, really.
So, James, I was talking earlier just about this concept of markets being kind of all interconnected. You're making a great point for me with just the diversity in which what you trade that you just went through, right? You've got some individual stocks, you've got indices, you've got Forex pairs, you've got commodities. I mean, you literally just have a little bit of everything. I'm the same way, right? I have currency trades and metals trades and stock trades and looking for index trades. So talk to me just for a little bit about that concept. You kind of have a similar approach where you are focused mostly on the macro story overall and then taking it to individual charts, right?
Yes, yeah, exactly. So with correlation in terms of being, as you said earlier, the markets and economies are essentially a web. You, as a trader, you've got to account for that in terms of, correlation. So what you don't want to do is buy gold and silver both at 5% risk just because they're both going up. Obviously, you might want to buy one at 1 or 2% risk. That makes complete sense. Now, if you're benefiting from whether it be risk off sentiment or whatever is the reason you're going into that market. So I've hedged it slightly with the S&P. So obviously we were looking at commodities or precious metals quite heavily when we saw tariffs as a big concern, and we had that huge spike in the VIX, or the spike in the VIX. We saw risk off. That's when we saw the S&P, the NASDAQ fall. We saw gold do quite well and silver do very well. So the approach to that was, okay, I want to buy gold, I want to buy silver, but the risk sentiment isn't quite there. The VIX is now falling. The S&P dropped 10%, which is a healthy correction. So I'm also going to buy the S&P. So if risk, for some reason, if we see large profit taken on precious metals, we see the VIX drop even lower, the S&P is likely to continue doing well. So I'm doing fine off that one. Vice versa. If risk completely goes back to complete risk off, the VIX spikes, I'm okay in silver. The S&P likely will hit stops.
Yeah.
But yeah, the portfolio at the moment is set up in a way, because to be perfectly honest with you, I'm very mixed on a lot of currencies, and I don't really have much of a set direction on a lot of things. So I'm happily diversified, taking 1-to-1s, 1-to-1.5s here and there, and that's it. I'm done. Yeah,
it's so interesting because what you essentially are doing, and I do the same, is we focus on the macro. We focus on the risk profile of markets that we're looking at, like the risk to reward to certain things. We also look at market sentiment. And when you start to string all that together, what you realize is that what I study and what I focus on is not necessarily gold or the NASDAQ or Euro US dollar. That's really the final product that we're going to use to express our analysis. So what I mean by that is, like, you mentioned it well there. Like, let's say we're looking at the VIX, or we're looking at the put to call skew, and we see everybody is super nervous or everybody is super euphoric. Again, we haven't thought about a symbol yet. We'll go to the symbol at the end of our analysis, right? We look at sentiment, we look at institutional positioning, we look at seasonality, we look at economic data for the US, for the European Union, all these different things, and then we choose a symbol. Like, that's the thing. I think so many traders do the exact opposite, where they're like, no, I'm set on trading euro dollar every day because I like trading euro dollar. And there's nothing wrong with that per se, if that works for you. But if you are somebody who is a fundamentalist, if you're somebody who looks at market sentiment, you track COT data, you track put to call stuff, you look at retail positioning, and you say, okay, here's what I'm seeing. Now I want to express my analysis through the euro dollar, or I want to express my analysis through gold or the NASDAQ. what happens is you start being more fluid in what you trade, because you're not necessarily trading NASDAQ, you're trading your bias that you found through the data. And maybe it just so happens that NASDAQ takes the lead, right? So it's a really interesting reversal of traditional thought in trading, which is, oh, I want to trade one chart, I just want to trade gold, or I just want to trade euro. Again, nothing wrong with that. But for people who are true fundamentalists, all the fundamentalists that I know, they don't trade, none of them trade one thing. They trade like a million things, like Chris Pulver, yourself, me, we trade, Frank. I mean, we all trade many different things. We're fluid in what we trade. We focus, however, on the macro and sentiment.
Yeah, absolutely. And I think one of the easiest things about economics is when you start on it, it looks very intimidating. You've got words that you would never really hear outside economics or finance.
Yeah.
And someone new, it's a crazy world. But when you start the basics and you understand, okay, well, inflation is this. If inflation's high, the central bank's likely going to hike rates, or it pushes them towards hiking.
Yes.
Or if it's low, maybe they'll hold or cut. And then you start putting these pieces together, but those things don't change. So obviously the actual data will change, but the indicator doesn't change. So all you've got to do is say, okay, well, inflation's gone up or inflation's gone down. And you already have that jigsaw in your head of, okay, inflation's gone up, so I know the central bank might do this. What does the labor market look like?
Yeah.
And you the analysis process doesn't change, and it becomes actually very, very easy and straightforward after you get used to the process.
Well, it's a never-ending rabbit hole, James, because actually you said it better there. Ultimately, what we're doing is we're trying to play the Fed, right? Or we're trying to play the ECB. That's ultimately, as you've said, that's the way to really phrase it, is we're trying to gauge money flow through the largest money flow entity, which is the Fed, the ECB, the Bank of England, et cetera. We're looking at the same stats that they're looking at. So I was mentioning the macro, right? Looking at NFP, looking at jobs data, unemployment rate, inflation. That's what they look at too. So we're going all the way through this whole system. It's all connected. That's the cool thing about markets, is when you start to appreciate them for what they are, they're this beautiful, kind of network of, it's like a spider web of different stuff. The cool thing is that we say, okay, we're trying to make a call as to what is likely what's the Fed going to do. If I told you that there's a very strong probability that the Fed is going to aggressively cut interest rates for the rest of the year, my guess is that fundamentalists in the audience, and of course, James, yourself, like, we could say, okay, so if we know the Fed is likely to cut interest rates, we probably want to select a handful of really strong stocks. We probably want to be long metals. We probably want to be long stocks. We probably don't want to be long the dollar, right? We want to be bearish the dollar. So that's how we can take a bias, an analysis from the macro and from where we think the Fed is going to move next, and we can extrapolate that across all the different charts. They all move based on the same key fundamental factors.
Yeah, absolutely. I think fundamentals is probably the hardest thing to start. Yeah. But it really is the easiest way to trade. When I say easy, I don't mean in terms of time. I just mean, again, once you get in the flow, it's kind of the same thing over and over.
Once you get it, you can't look at the market. That's the problem. Here, everybody who's listening, if you're like, maybe I'm going to dive into this fundamentals thing. I hear these guys talking about it. They're talking about fundamentals, talking about trying to figure out the Fed. What do all these data points really mean? Like, are they just talking about these for fun? It sounds like a whole bunch of finance major, economic jargon. And I'm not a finance major. James, are you a finance major?
Nope.
So we're not finance majors. We just come to this conclusion. Oh, this is the stuff that moves the market. But the problem is, here's my warning to everybody who's watching this stream. If you go down the rabbit hole of fundamentals, here's what's going to happen to you. You'll never be able to go back, because what happens is, once you look at the fundamentals, once you understand what all these metrics are telling you about the economy, and you watch how the market immediately responds and reacts to those data points coming in, your framework for the markets becomes so much more enlightened. You understand what's moving it. And the problem is, you can never go back to fair value gaps ever again. Yeah,
I was about to say that actually. I think it actually, from the economic side, it really it helps simplify the technicals, because you actually you end up at a point where you don't care about what's happening on the 15-minute time frame. You're looking at, okay, the weekly's at a support, I'm just going to buy this, because obviously the fundamental bias is strong enough to do that. So it really does streamline everything, actually.
Yeah. Well, and not to, I take back my hard. It's not necessarily fair value yet. It's all sorts of technical things, right? Moving average, crossovers. What the point that I'm trying to make, and I think James, you're on the same page with this, is once you understand the fundamentals, the macro, like once you start piecing it together, and you're like, oh, so that's why the Fed's going to cut, and when they cut, it's going to do this, and all these charts are going to move this way, and then when it happens in front of your eyes, you're like, okay, that's the weather, right? The weather in this market is fundamentals. It rain, shine, whatever it is, cold weather, hot weather, that's the fundamentals in the market. It sets the tone for everything else.
Yeah, I think you're silly to think that the Bears all of a sudden are just completely absent. I even pulled this headline this morning. I think Trump is now in the bandwagon of jawboning the markets. This is certainly a headline that's going to support it. Probably more lenient than reciprocal. So April 2nd, taking away some of that potential uncertainty by like, look, we're willing to negotiate. We're willing to go to the table and figure out what's going to be hopefully mutually beneficial. But this is one headline, and who knows what it looks like later today or tomorrow or maybe on April 2nd. So I'm still just cautious, right? A lot of defense, a lot of closed out trades for winners, watching levels closely. Time is going to help. I'd like to see a Thursday, Friday for this week still hold in there. If Thursday, Friday can hold out with trying to make a high for the week, that would be helpful. So let's do some top down. Let's look at currency strength. Currency strength for today, we have New Zealand and Aussie on top. We got the CAD making a bit of a run. Euros in the middle with the dollar and the Swiss. JPY and pound on the weaker side. Not a ton of volatility on currencies. A little bit, but not a ton. 50 and 50. So you're getting maybe about a 100-point move somewhere out there between the pound New Zealand. That's about it. Other than that, pretty contained. We have the markets down slightly. S&P is down about 0.43%. SPY down 0.44. Equal weight, interesting. Equal weight is up. That's a pretty big divergence between S&P. So this has to be a little way on Mag 7 again. Yep. So Mags is down. Let's take a look at those, by the way. So Apple's actually flat on the day. Amazon is down on the day. Broadcom is that's a big one there. So Broadcom is, they crossed $1 trillion. Now they're $861 billion. So Broadcom is down $13 for the last 3 days. That's not a good look. So that's dragging down for it's not technically Mag 7, but they were throwing them in like the Fantastic 8 or whatever the heck they're being called now. Google slightly down in the day. Meta also slightly down in the day. Microsoft slightly down in the day. That one, I don't think I have any trades on Microsoft outside of April. I'm going to hang on to those. Netflix down as well. Yeah, I like Netflix going a little bit lower. I think Netflix, if it heads down, that's good. It's not a Mag 7. It's like one of the old Fangman stocks. But I have a Butterfly up here, and this one was closed out for full profit last week. NVIDIA, pretty big drop in NVIDIA. That gap lower from 120 and change all the way down to an open today at 118 and a sell off towards 115. So NVIDIA not looking awesome. Tesla up to 289, almost 290, and back down to 275. I did a video yesterday on my YouTube channel in the afternoon. I just shared a trade. This is a trade that I took. This is a trade that I kept these shares in assignment from because it was below 255. So I took the shares. I put in a cover call this week at 247.50. I pulled in about $18 of credit. I rolled it yesterday in session for about $2.60. So if by next Friday I could have just kept it and taken the income, but I thought, well, if we stay above like the 247.50 level was still mechanically in a good spot for the option chain for next Friday. So if we stay above 247.50 by next week, I make about $6,000 on Tesla in a 2-week period. It's not bad for a little income flip. And price. I'm curious if we, can kind of spy on Tesla and keep an eye on maybe a bullish pattern. The downside right now is that Tesla is still underneath the 200 moving average, right? Like that's a tricky spot. So we could be kind of, carving out a low. Maybe there's some type of falling wedge. Maybe it gets worse, right? Maybe this isn't done yet. But there is some pretty interesting news coming out for Tesla. I think there was something with Saudi Arabia. Is that what I read? Market reacted positively to President Trump's hints at delaying auto tariffs, reducing trade concerns. Okay. And then I thought there was something on Saudi Arabia for Tesla that came out this week as well. But anyway, as long as we stay above 247.50, I could care less. It's just an income trade plus this, plus own shares. Berkshire Hathaway still making all-time highs. How is this stock going to find the 200 moving average? I don't know. Warren Buffett probably has to pass away. That's awful to say, but this is a company that's sitting on about 20% of their assets in cash, waiting for a bigger opportunity. What was value plays and they've held on to for a decade is no longer value plays. That's why they were net sellers of Apple. They sold Bank of America. They've obviously rotated around quite a bit. All right, bonds. TLT is down. Let's see what yields are doing. Are yields back up? Probably. Hey, you know it. 10-year just still sticking around that 4.35. This is why Trump is urging the Fed to cut rates. That's a terrible decision, right? If the Fed is forced to cut rates, the market reacted that way to cutting rates. If we cut rates again and the market sniffs it out thinking it's too soon and there's recession risks, then yields are going to go higher. I think the Fed should do nothing. I really do. I think the Fed would be silly to do to feel pressured to cut early. I mean, right now the next Fed meeting is May. There's not a Fed meeting in April. So if we take a look at the probabilities here, it's still a June. So I mean, we're still looking at a pause in May. I haven't seen the shift at all, but there's nothing in April. So does it give the market a chance to do something seasonally? Seasonally, the market should be going higher. We typically get through like a little March pullback or February, March pullback, and then middle of March, late March, it picks itself back up, dusts itself off, and then March, April, May, we got a pre-summer push. If it's strong enough, it lasts into the summer, typically going into like July and August. So that's kind of the big question mark we're at. Are we going to stay above this 200 moving average? And this was probably a big sign of relief for a lot of investors to see that price was able to get back above it. My concern was that we had this pullback right to it, rejection, and then it fades back down. So the fact that we did close above that, that's a good sign. Now we need to see if it will stay there. If it will stay there, that's good. Let the bulls and bears duke it out. There's still room to get back to bigger pullback zones, right? We're going to see if those bears want to claw back. So I think this is a spot where be very careful. I don't want to get heavily positioned for one way or the other. My hedges that are in are out to August and September and out to December for right now. And I don't really feel like I need to have fresh hedges on, not yet, but it's probably going to be somewhat wise to have something maybe for like a 30 to 60 day window, just in case we have another dump. I still think that this is a bear trap area. If this market's going to be resilient this year, and I know I've talked about this, but I really realistically think that if the market does too much damage below this level and we start to get into free fall mode, US goes into recession, drags the global economy down, everything's bad. That's how quickly this whole thing could be like Europe is up and China's up and the US it's going to fight back. Maybe. But if the US drags the global economy down, nothing's going to look good. So I get it. Like the Trump put and the Fed put may be dramatically lower as far as like stepping in and reacting to something. But this is going to do a lot of psychological damage and sentiment damage and real investment damage. If you take a 10% haircut in your 401k or 10% haircut in your portfolio by passive investing or financial planners are getting their asses kicked in the markets, taking another 5 or 10% hit to the downside to have a 20% correction, nobody's going to be happy, right? And yes, I understand that a 20% correction could ultimately lead to multiple years of getting back to these highs. But if a buy and hold investor is just getting back to all-time highs 2 or 3 years later, that's opportunity cost, right? That's why it's important that you're still investing as this market may be dropping. But I think if we want to have a global economy that is resilient and still growing, and everyone is catching up to the US, I think the US needs to do its part and stay resilient as the global economy can still have that rotation into, Europe is going to be on a major spending spree this year. China's still continuing what they started last fall in September, major spending spree. To kind of put a backstop to the failing markets. So it's a tricky dance, but we'll watch it all unfold. So let's see what happens. All right, what else? Dow is actually up on the day. Good. I bought some shares of the DIA back on this little dip. I've got some 1-on-1 trades that I closed out as well. Let me see if I have any of those left. Check on my DIA. I might not have any trades left. Nope, I just have shares.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.